were a net buyer of equities during the drawdown in December. So you, like Brad, see big opportunity still ahead in tech?
Oh, absolutely. I mean, we saw this as a massive buying opportunity. We waded in and bought stocks like Netflix down quite a bit from its peak and at valuations that made a ton of sense to us. And we bought more companies in the software area as well.
Twilio was a new buy for you?
Yes, Twilio was a new buy. We think that they're rewiring the way that software companies and internet companies utilize voice and messaging. And the acquisition that they made of SendGrid is very accretive to the overall business.
Well, we had these big gains, obviously, from December until now.
Right.
How does that impact your view for the remainder of the year? Did we pull a bunch forward already?
Well, I think we've seen a big return. I mean, it's been a big run up, and we're happy about that, of course. But we'll see what the rest of the year brings to us. But we see real opportunities out there.
Glenn, if you don't mind me jumping in,
sure.
Switching a little bit to privates. You've been in the market buying Slack.
Yes.
Slack, as we've discussed, is going to be a big direct listing.
Right.
Fantastic company, growing extraordinarily fast. One of my favorite products in software. We've wired our business around it. Talk to us a little bit about why you've been in the market buying Slack. It's obviously a high multiple stock. And also maybe just touch on the direct listing versus the IPO route for the company.
Sure. So look, Slack is rewiring the way people communicate and do business out here, and I think that's moving, regionally across the country and globally. And so what we've seen is that, it's in some ways replacing email and replacing the telephone. And those are massive end markets. We're talking $20, $30 billion of recurring revenue. And here's a company whose only real competitor, I think, is Microsoft. Their other competitor in Atlassian quit the market and sold their business to Slack because their customers wanted their other products to work with Slack, so they didn't want to compete with Slack anymore. And Microsoft is in kind of a weird spot, right? They don't get paid more at most large enterprise accounts if those accounts adopt their product Teams. So it's not an incremental revenue opportunity for them. And therefore, they've kind of let this market slip to Slack. And this is a massive business. I think the key thing to look at when you look at the results of the company are that this is a enterprise software company that is growing and acquiring customers as efficiently as any consumer virally growing company. That's incredible. We don't see that. Maybe the closest other company to it is Zoom, which I know you guys are going to talk about a little later.
I should also say our parent company, Comcast, is an investor in Slack. So
it is.
They obviously believe a lot of what you have to say. What about the direct listing, though, idea that we're talking about here, on a day where Spotify is coming out with their earnings?
Look, there's been a massive change in what's happened. We call them private IPOs. So the amount of capital that's available to high growth, later stage companies in Silicon Valley, it's coming globally. It's coming from mutual funds. It's coming from sovereign wealth funds. It's coming from hedge funds, private equity firms. So these companies don't need to go public to get capital, and therefore they can delay their IPO. By the time they come public, they don't need more capital. They just need a listed stock to provide their employees liquidity so they can buy their homes, they can go on with their lives and enjoy the benefits of being part of a public company.
Let's double click on this for a second, because I think it's really important to viewers of the show, which is if you think about when Priceline went public, it was worth $1 billion. Today, it's worth $100 billion.
Right.
$99 billion of value creation went to public market investors. Uber's going to go public at $100 billion. All $100 billion of that value creation went to private market investors. So you think about the repercussions across, the investing landscape for technology. This value capture is occurring in the private markets, and Glenn has been a leader in that. We certainly invest in both of those markets. I think it is very difficult today to capture that value if you are not participating in the private markets.
Here's the one thing I would say, though. You have an opportunity as a public market shareholder to invest with one of the biggest players in this market in SoftBank. Okay, SoftBank is trading at roughly a 50% discount to the market value of its holdings. You can buy that today. You can buy it in the U.S. stock market under SFTBY.
Your biggest position is
SoftBank. Yes, it is. And Son is as close as we get to having a Warren Buffett of technology.
But Glenn, let me just say, I can't let you off without asking the question. Do you have any, does the fact that they are taking the bulk of their capital from the Saudis, does that cause you any concern?
Well, look, their capital, they have tons of their own capital.
Correct.
I think there are many other sovereign wealth funds that would be happy to be a part and have Son, who I think is one of the sharpest investors in the world, making investments for them. And, look, this is a guy who bet on Bill Gates early in his career, made his first fortune. Then he bet on Jerry Yang and helping him create Yahoo Japan. Then he bet on Steve Jobs and this thing called the iPhone before it existed, right? Then he doubled his fortune again. And then he bet on Jack Ma and tripled his fortune.
Right.
This is the guy that you can invest with.
I mean, they're transforming the Valley, which we're going to get into a little bit later with Pat Grady as well. I want to sort of tee up a little bit of a debate because
Sure.
I think we should have one about Facebook,
Yes.
which you sold. You no longer have a position at all.
Yes.
You call it a real crisis for that company. This is their Tylenol tampering moment.
Yes.
This is a gentleman who just put more than 20% of his fund in Facebook.
Let's go.
Hey, they've made its stock has made a nice recovery. I think part of what it proves is, addictive products are difficult to quit. You can turn down the volume maybe, but it's been hard and a lot of people who said they were going to quit, they moved over to other products that they make, whether it's WhatsApp or others, Instagram. And look, it surprised me how fast it's bounced back. We, in the advertising space, we think the biggest net winner, net new winner is Amazon. So we've put a huge position in Amazon. It's our second largest holding in the fund. And so that's where our money is today.
Yeah, I mean, I'll just come back to the fact that, we think Facebook has faster growth. We think it's got an excellent management team. We think it's betting on the future. You talk about, Slack as a communications platform. You simply don't communicate in India and many other countries around the world without WhatsApp. Yeah. We like how the company is managing, managing the issues that are coming its way. Yeah. But the fact of the matter is Amazon's a fantastic business. Google remains a fantastic business. I think you can continue to own these super apps. For us, this was the most asymmetric risk reward we've seen in FANG over the course of the last 2 years.
You own Tesla?
Not anymore.
Not anymore.
That's correct.
So you're out of that.
Yes.
Twilio?
Had a small position in Tesla, not a big one. But
I want to have that debate.
You want to have that debate?
No, I think he's come around. He's come around. Tesla's, speaking of Tesla, Elon announced last week 1 million robo-taxis are going to be unleashed on the world in 2020. Yes. If you believe that, then you probably shouldn't be investing in Uber or Lyft. What do you think? Over or under on 1 million robo-taxis in 2020?
Under.
Under.
Yes.
I mean, it hasn't been wrong to take the under on a lot of the numbers that Musk has thrown out on a large number of things. Why did you get out of Tesla?
Well, I think, why did I get into? Maybe we'll start there. I think that you walk into a Tesla showroom and you're going to see 3 of the most amazing cars in the market today. And most of the time that translates into a great company growing revenue and earnings quite rapidly. And I think they've had some execution challenges around getting the cars made, around partnerships and suppliers. And I think it's been, they're still in the auto industry. It's not a tech company. It's an auto company. Right. And so it's a challenging industry. So it's been a little bit tougher than
I mean, let's be clear. The vibrancy of Silicon Valley and the vibrancy of the American economy is better for having Elon Musk in it, pushing the envelope on electric vehicles, pushing the envelope with SpaceX. But the reality is that this is a car company with car company-like margins and promises that they're going to transform the economics of that business through a fleet of robo-taxis. I just find a bit far-fetched. I think that Elon would do Tesla a better service and, frankly, the Valley a better service by under-promising and over-delivering. But this stock has, frankly, lived ahead of itself for the last 4 years.